So, hello, and a massive hello to everybody. Hope everybody's having a great day. No trade calls, no recommendations, responsible loan stuff. We're here for educational purpose only. Let's do this. Hey guys, how's it going? Cool, thank you so much. Yeah, let's see what's going on as usual. No real agenda here. I'm happy to just stick around as long as people have questions. So shoot, let me know what charts you want me to look at, what charts you want me to review. If you have any trade you're in, you want a different take on how to manage the trade, what to look for. More than happy to discuss anything. Nothing's off the table. And as usual, we'll run these for as long as people have questions. More than happy to stay on and go through charts and just shoot the breeze and have some fun. Okay, MB, Testo, Knut, how's it going, guys? Good stuff. Good to see you. So I think here probably don't be shy, ask away. So as we start, before we get any questions, basically where are we, right, in the market? Basically, we're still kind of hovering here, and I was posting that meme where basically it seems to be we're in the sell Friday, buy Monday kind of scenario, and that seems to be how the market's trading. We've had a lot of talk about Wednesdays being the strongest day so far this year, but clearly the market is stuck, right? The market is stuck. It doesn't really know which way to go. It's not it's not doing a good job at attracting new sellers at lows, and it's not doing a good job of attracting new buyers once we get into that descending trend line, right? So we'll have to wait and see. I think one thing which is important to keep in mind is that here going into this PPI, are we going to get a similar reaction to yesterday? But more importantly, as we go into the weekend, keep in mind we've got a long weekend coming up, right? So there's an awful lot of headline risk, whether that's tweets, whether that's executive orders, whether that's from the Middle East, whether that's from Russia, Ukraine. Keep in mind we're going into a 3-day weekend, so also we'll have to see how the market decides to be positioned into the weekend. Now, all things being equal, if you see the way we've been trading the last Fridays, where Fridays tend to be heavy days, well, on paper, and I know this market has a way of throwing curveballs at us, but on paper, if we've traded like that the last 3 Fridays, you're probably still going to get something on the wires this Friday. Normally, you wouldn't expect people to want to be positioned gung ho max long into the 3-day weekend, so we could see some more weakness. But I think in terms of the bigger picture, the point is that actually let's look at it this way. If we look at something like SPX here, right? This is still stuck at those final targets we had for last year. But the way, the way I would be looking at this here is that most likely what we're seeing is a lot of retail getting caught in the middle of that choppy range. But bigger picture, there's not enough flows to really, do anything aggressive, and most likely, anybody who's short thinking that we're going to roll yada 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 has really no reason to get out of their shorts unless we take out those highs, right? So probably the only way you get a real Momo push is if we break those highs. We know that all-time highs are bullish, all-time highs attract buyers, all-time highs mean that all the shorts are going to have to cover, so that's buy orders. So that's probably what we need is traction above that to change the mind of the shorts and attract new longs. Equally, the way the market's been trading, even though we may get some scares here and there, most likely, think about it, people are probably not as long as they want to be. Everybody still has very bullish sentiment for Trump, the administration. Everybody wants to stay long. So even if we were to dump, back down into, say, the 100 DMA or back into this range low, people are still going to be gagging to buy the dip, right? So I suspect that equally, as much as, you won't get any big change unless you take out those highs to the upside, attracting new buyers, most likely, unless we get daily closes back below the 200 DMA, probably, anybody who's long is going to be looking to add to those, bigger pictures. So this creates a huge chop range. Hey, Crazy, how's it going? So this chances. So I still think, I think we discussed it here again with all the videos and the daily webinars. It's hard for me to keep track of what I discussed where, but something we were discussing since the back end of last year is that this year is, for us, is going to be a good year. But it's a tactical market, right? It's a trader's market. It's not a position trade market. There's far too much headline risk. There's far too many things going on. It's a trader's market. So I think you really have to be tactical. And again, the market's being super tactical and technical across the board. Even if you look at yesterday, we came into the open yesterday after that data point. We're discussing this in the webinar, and what we had ES back into an S3, NASDAQ into an S3, Kiwi into an S3. A lot of strong horizontal reference points on an intraday basis holding. And as we said, as bad as it looks, and as much as the market probably needs to reprice, if you're mechanical here, yesterday into the open, the only traders looking for longs at these, looking for these lows to hold. Now, would you have had it in your bingo card or your base case assumption that we would have retraced so aggressively that NASDAQ would have been green, we would have taken out these highs? Absolutely not. But all things being equal, it's just another thing that shows you that this is not a market to try and get into that big position trade or that big swing trade. It's a market where you just need to be very tactical, especially because the market is being very, very tactical and offering very clear levels to trade against, right? So that's pretty much where we are. I think clearly any rally or pump in the markets needs to be, you need to be a little bit suspicious of it, especially if it continues on that weaker volume, especially if you continue to see bonds trading a little bit heavy, right? Then suspect, all the rallies on equities are suspect. And also keep in mind that all these, you also have some of these, these pukes that happened, in the overnight session, pre-market open. All these lows, these are very weak lows, right? The same way this printed, then we printed lower. We had this one, we tried to come back to yesterday, but all the, it's fairly rare for a substantial or strong multi-week, multi-month swing high or swing low to be set outside. Hey, Luca, how's it going? To be set outside of RTH. So this is also another thing that tells you you need to be a little bit suspect of all these swing lows or swing highs that are set out in the RTH. So I think as much as the market wants to trade to the upside, clearly the velocity is to the downside. And as you saw on that move we had yesterday down on CPI, from the Monday low, it took us 50 plus hours to get from the low into the high pre the CPI. And then it took us 5 minutes to unwind 54 hours of action. And that's telling you that the market is rallying on poor structure, that the market is not particularly strong, right? Doesn't mean it can't go higher, but that's the way it's going. So any comments, any questions, anything anybody's looking at, anything you wants to discuss? I think you've got, again, if you haven't looked at it on the Substack, I posted a video on explaining the range on Mag 7, and I think it's a very interesting video. So if you haven't looked at that, I would encourage you to go and watch it. But clearly this can be, I think this is because of the weight, because of the importance of these names. Again, we still have to get through NVIDIA earnings, but I think this is a very, very interesting control chart to give you a feel of how the market is trading, or if you can really trust the move higher or lower. And right here, you can see that even though the bids are still supporting, we're holding below the midpoint of this range. Again, watch the video to see how we construct it and everything. But as long as we don't see this trading back above the 10-day, back above the top end of the range, your base case assumption is still that the market's probably going to try and unwind here and come back into that election ramp, okay? Hey, Tessa, how's it going? So gold. So I think we discussed this last time with you, gold, and we talked about the fact that gold is just, 3,000, right? 3,000 attracts. Don't make it harder than it should be. Psychological level to the upside, and that's what seems to be attracting. We had a couple of targets from the current move it's in, and those have been hit. We had 27.53 and 29.46, and that's hit. But here, really, there's not much to say. This is likely a grind higher. The way this is trading, it's grinding higher. The only problem here is that you probably have a lot of weak players, a lot of retail getting long at very poor location. So you would expect to see systematic dumps here and there, stop hunts, kind of like you saw here, little flushes. But as long as all these flushes, you see them getting bought quickly, you see this tight action on the 10 DMA, then path of least resistance is higher. And keep in mind, even though you can try and use, different kinds of technical analysis to give you some upside targets, when the market is making new all-time highs like this or new all-time lows, as technical traders, what we do is, if you look to the left of the chart, what happens? You got nothing, right? So it's kind of like all here, when you have something to the left of the chart, you have visual reference points, you have volume reference points, et cetera, et cetera. But here, essentially, it's kind of like you're driving and then, no more map, right? No more map. So any new high possible when you're hitting new levels like that. Now, if we start to correct, I think most likely also because of how technically this is trading to the downside, for this to continue in this kind of slow grind higher towards that 3,000, you want that 10-day moving average to continue to hold from a day close perspective. And as long as that's holding, much to do about nothing. Now, if that 10-day moving average doesn't hold from a day close perspective, and also if you see decent volume coming in, then your base case assumption is that there's a potential flush and a potential unwind. The visual reference points I can have just off the top of my head here, just glancing at it, is you've got a gap here, which is pretty much, you've got confluence with this 50-day and this 100-day coming in, this previous high here where this reversal attempt at 27.53. So I would say, as long as it holds that 10-day, then sky's the limit. It's still trying to grind higher into that 3,000. And on downside, especially a downside close below the 10-day moving average with volume, then there's a risk of a flush back down into that level. Then it's going to depend. Why is it? Is it just a technical break? Is there just a little bit of a panic across the board? And, when there's panic headlines and people just need to de-risk, take down exposure, just everything gets sold hard, right? Then usually if you start to see risk off flows coming in, plays coming in, then gold is one of the first ones to start to bounce. So you would not expect it to trade back below this area unless something really, really weird happens or there's, a big change in rates or something very, very specific. Okay? Hope that answers your question. Any other comments, questions, chart anybody wants to look at? Don't be shy. Again, I'll go as long as people have questions. If not, I'll cut it short. Let me think. Are there interesting charts to look at that? I think what's interesting is you've got a lot of stuff which is stuck at these sideways ranges, right? Clearly, a lot of people are looking at Tesla, and this is really not looking pretty. I think it's easier to just step back on the weekly. And it looks like this is trying to come all the way back down into this whole sub 300 zone. Clearly, we had Musk saying that he's going to be focused on Doge for the next 4 months, pretty much. So maybe that's not that great. We don't know what kind of headline flow, but this is a pretty brutal reversal. So again, we'll have to see what gives on Tesla. But I think because we're seeing a lot of rotations here, there, intraday, yada, 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 I think it makes a lot more sense rather than, unless you're trading the single chart, it makes a lot more sense, as I said before, to focus on something like the FANG chart, the FANG chart. I think it makes a lot more sense. It's a lot more useful to get a feel for where we are and what's going on, okay? AMD, sure. So Jensen's cousin, right? So the dog of dogs. Again, don't get me canceled. That's a joke. But AMD is. Let's get on another chart. AMD's been trading like doo-doo, right? And again, if you look, I think a good control chart here is also SMH. I posted that video on SMH, but again, it's a lot of Nvidia, right? So what's going on AMD? Let's look at this. AMD is just an actual, I say jokingly, affectionately, a dog, because this is just an absolutely brutal unwind, right? Absolutely brutal unwind. So really here, what's going on here? And I mean, it doesn't look like there's much all the way back sub 100. I know it sounds strange, right? But it really doesn't look like there's much until we get back sub 100. And and especially in this kind of configuration, any rally is likely going to be a sale. So at what point would you be looking to pull this up unless you've done some kind of fundamental analysis on this? I think the levels you got to draw here is, you're looking at these previous lows here, right? And the psychological 100 mark as a potential kind of bounce zone. To the upside, you can see that every rip, you've got a lot of sell zones, whether that's the 10-day, the 50-day, the 100, the 200. So I think what's key here going back is we have it marked up as the 133 level. This is a very, very important level where we sold off aggressively from, where the market tried to hold for ramps. Clearly, this is heavy. The whole pattern is heavy, and it looks like it needs to come back into the 100. So I think to the downside, make it easy. Look at that 100 being a psychological bull bear line for a bounce, or for, something extremely ugly to happen. And this whole area here, which is the 133 to the 100, I think is still fairly neutral, and it can start to turn a little bit bullish if we get, back above the 133. Hopefully the 200 will be coming down. Then that gives us a little bit of downside Momo. So I would say, summing it up, you've got two key bull bear lines, and if you look at the range, basically widening up, you can look at this range, which is, call it 165, 133, 133, 100. But again, this is looking fairly heavy, right? Fairly heavy. And keep in mind that when stuff is selling off like this, if the market turns, and usually what's heavy will continue to be heavy, and what's strong will continue to be stronger. There's a reason why stuff is stronger or things are heavier, especially when it's been lasting for multi-months, right? There needs to be a real catalyst to change that. So a lot of people, when they're looking for shorts, they get sucked into thinking, I want to short the one that's the highest and been ripping the most because that's the one that has to fall the most. Or are they looking for longs, say chips? They're looking, let me find the one that's being beaten up the most because that's the one that's going to bounce the most. Usually it's not always like that. Usually there's a reason why something inside a sector, inside a basket, whatever, is stronger and weaker. And usually it stays that way unless there's a really clear catalyst. Okay. I hope that was useful. So Euro USD. Euro USD, what's going on Euro USD? Well, Euro USD is kind of stuck here, right? And it's tied with, it's the opposite of essentially 60% of the DXY, right? And you can see this dollar index. So maybe we can start talking about the dollar index. And basically what we discussed about the dollar index was that we were in this big range for a long time, which was the 106, 103, 100. And here we've had this breakout, right? And the key question was how we behave around the 109, which was the key pivotal level. That 109 holds the key for 114 or for a move back into 106, okay? And right now, of course, it's going to be down to rates, it's going to be down to everything. But what you really want to see is how we trade around this level. I think that broadly speaking, as long as you don't trade back below 106, your base case assumption has to be sideways to up, and back below the 106, you can get more aggressively bearish on the dollar here, right? Now, euro, there's a lot of people trying to think, okay, well, what's the play here? Well, Fed is like the Fed again. Once again, all the guys coming into at the beginning of the year, Fed's going to cut a gazillion times. They keep on getting whacked, and they're like third year in a row. Clearly, it's not going to happen. The Fed is not cutting anytime soon. And if you see what the ECB is saying, the ECB keeps on saying that they're going to continue to be very dovish. They're going to continue to cut 25, possibly 50, right? So here, if you're thinking it that way, it doesn't really make sense why the euro should be rallying aggressively. I think here, shorter term, a lot of people are looking for some kind of a bounce with some kind of ceasefire, some kind of resolution in Russia, Ukraine. But I think that's a shorter term event, right? A shorter term event. If you ask for my gut feeling, I suspect that even though ultimately you'll try and move higher, we probably still need to retest these lows. But right now, just looking at it technically, it really looks like it's trying to base, right? It's trying to put in a basing pattern. Now, at what point would you be a lot more comfortable saying, okay, this is based, and this is going to rip? It's above the 105, and you see, who asked this, Knut, that this was the big pivotal level we had marked on our chart. So I think here above 105, you've got a potential for a quick 200 pips to the upside, catch people off guard all the way back to that 200 DMA. But as long as, similar to the equity rallies, as long as we don't trade back above the 105, I think you have to be a little bit suspect of the strength in euro. And base case assumption is that these lows need to be tested again, right? So the way I'd be looking at it is essentially that this is a huge chop range. You can see this is probably, eyeballing it. This is mid, like we looked at on SMH, like we looked at on that Fangman chart. This is a amber range, and then it turns green if we're back above, and it turns red if we trade back below, right? So I think here it's another one of those charts like the SMH, like the Mag 7, that where the market is in wait and see. We've made a move, and there's a lot of people that have very opposing opinions on how things are going to play out, whether you're talking about rates, whether you're talking about how successful Trump is going to be, yada, yada, yada. And neither of those two sides, whether you're talking on euro, whether you're talking on equities, whether you're talking on bonds, in my opinion here, have had anything to make them give up that position trade, right? And that's why we continue to trade in these broader ranges. And again, what that means is that this is a very tactical market. This is a very technical market, and you can trade aggressively inside these ranges. And I fear for those who don't understand that this year is going to be a very technical market, there's a lot of opportunity costs where they're going to be stuck at either nursing dog positions or nursing positions that are not going anywhere, just wasting a lot of time instead of playing those ranges and then being more aggressive on those bigger swing trades if we get a proper catalyst or a real catalyst, right? Now, ETH, well, I mean, if you're looking at, essentially whether you're looking, Bitcoin, we're kind of still stuck here. It's just trading with risk 100%, right? I think all things being equal, it's good that it's holding here, but I don't know if Saylor's the only one buying. But I mean, all things being equal, with all the enthusiasm pump we got into 2015, this is really not ideal, right? But essentially, once again, and we've discussed this a lot last year, this is just trading with liquidity. This is just trading with risk, right? Don't make it harder than it should be, right? And if you're looking at Ethereum, it's still the same thing. It's kind of similar, but I mean, it just doesn't look good, right? Does that mean that you want to short these? Absolutely not. But they're just looking fairly heavy. But I think it's just a sign of the broader, the broader market that probably needs to unwind to the downside a little bit. Euro CHF. So again, I don't trade this. what's going on? Not an awful lot. Kind of hovering at this 200. Yeah, it's similar to the euro, right? Who asked this? Yeah, basically, you see how it's the same kind of pattern, but you've still got a little bit of a range here. So, I mean, if you go back in the bigger picture, right, you could see these moves, and we say, there's no such thing as a bad tick. So, it's normal that these levels got tested, but here it's just hovering. So, are we going to see some kind of a big rip, big basing pattern? I mean, it's tricky, right? Clearly the SMB is not going to be chuffed on any downside traction, but maybe we still need to get some kind of an unwind in the market, a little bit of a scare before this starts to stabilize. I just don't see anything specific here. This is a chart that anything CHF related. Everybody who traded FX, everybody traded these very, very aggressively. Swissy, one of the most traded pairs. Except once the SMB destroyed this market, I know very few, traders that still even bother looking at CHF because the SMBs just killed it. So I think there are far more. If I can give you my advice for whatever it's worth, is there are far more interesting trades out there. But everything, CHF is going to end up trading very similarly, right? But it's tricky, right? It's. I just don't think there's much edge. I don't know if you have a specific question on the chart, but it's just kind of hovering here. If you want to look at it, basically you've got these lows kind of here where it's defended. SMB is going to be defending that. Clearly, it's trying to rip higher, but as long as we keep on getting all these tape bombs and the market being a little bit scared, probably you have some downside traction. If you can start getting day closes, weekly closes above this level, would it be surprising to see it try to rip into this higher level of this bigger range? Absolutely not. But do I think there's a lot of edge in this area here? Not really, right? USD CHF. USD CHF. Yeah, here, I mean, again, keep in mind, Tesla, there's no such thing as a triple top, right? So, I mean, some people might argue that this is kind of like quadruple or something, but when you tend to see these kind of patterns, usually sooner or later, it doesn't leave this pattern untouched. You get some kind of a flush to the upside, right? So here, it's the same thing as that euro. Look at it, what's happening here. You've got an upside wall, right? You've got a sideways chop range because the market, it's all the same chart. We can play around with all the chart, but it's all the same chart ultimately. And the market's deciding what to do here, right? We're seeing strong push to defend this upside break, right? And it makes sense because usually these kind of patterns tend to break to the upside. What is the risk on a catalyst or something is that we break back below here and then we try and unwind this whole move. But given where we are here, to me, the interesting trades are day close below, right, this area, or day close above, or pop above and fail, or pop below and fail. So, I would set alert here, and unless these two levels get touched, I'm really not that interested inside that range. Does that answer your question? Thanks for bringing that up, Testo. So, Kekuli, hope I said that right. Hope that answers your question. If you have any other questions, let me know. So that's it. And a lot of FX is being kind of killed like that in terms of it should get more interesting this year, but FX has been not that interesting, that interesting. Let's see if these, while I give everybody a chance to see if there's any chart you want me to review, I'm just going to eyeball this chart, see if there's any other interesting chart that comes to mind. But again, keep in mind, it's a mixed bag because you've got stuff like Apple's trying to hold this key level, so far doing a good job. Amazon not looking pretty. Right, this is a big test. If it can't hold here, you'd expect it to come and test these lows again. Microsoft, this is looking really ugly. There's a stick save, but unless it gets back above the pivotal level, this is still no bueno. You have Facebook, sky's the limit, just going crazy to the upside. Nvidia, again, I think that unless you get back above the 140, that's the pivotal level. This is a little bit of chop. It's probably going to hang around here waiting for earnings. If you're looking at Google, very, very ugly. If you're looking at Tesla, very, very ugly. You do have a nice little pop on Intel. This is one of the charts we had at the beginning of the year as interesting plays, swing long. So this is doing quite well. But again, it's a little bit of a mixed bag across the board, right? And here, again, as I said at the beginning, you want to watch bonds very, very closely, right? And you can see here, unless you see TLT trading back above, 91.80, 92s, this is still extremely heavy. Now, of course, we know that, Trump and Bessent, they've told us, essentially the focus is no longer the stock market, it's the 10-year yield. So you keep an eye on the 10-year yield. But, as long as it can't get back above there, this is still fairly heavy. And, and rallies need to be, our suspect, I think, in equities. Any comments, any questions, any other chart, anything anybody wants to discuss? Looks like we've done most of them. Happy to go through any other chart if anybody has questions. If not, we're going to call it a day. Again, don't underestimate the risk over the weekend, right? We got a lot of headline risk, whether it's Middle East, whether it's Russia, Ukraine, whether it's executive orders, whether it's tariffs. There's just going to be an awful lot of headline risk over the weekend. And remember, we're going into the 3-day weekend. So it's going to be very interesting to see how we're positioned going into next week, which is going to be an OPEX week. Okay, guys, thank you so much for stopping by. Always fun to have these. We'll do one in a month's time or less. I couldn't get one done in January, just had so much stuff going on, but I'll try and do these, as I said, once every month. So I've made a note. I am one down. I missed January, so one of these next months we'll do a couple in a row. Okay? Wishing everybody an awesome one. Thank you so much. Have a great one. Bye-bye, guys.